In this lecture, I'm going to teach you stop loss, but stop loss has the concept, the right way to see it. And in this video, what exactly are we going to see? First, we will see that what kind of stop losses are there. So there are two kinds, structural and expectational. We will see what they are, and we will see plenty of trade examples of these two. Then we will see, if you're doing scalping or intraday, what kind of stop loss and how this concept works here, and what is the difference in using the concept of stop loss for swing trading and positional trading as well. And then we will touch up a little bit on the risk management part and stop loss. All right, let's begin the lecture, and let's first see what these two are and what's the larger difference between them. So you will see that structural stop loss that you see on the left hand side, it's pretty simple and kind of self explanatory. It's simply based on the structures that you see on the chart to determine your stop loss. What that implies is, let's say you have a structure like this on the chart. So the price is going up, and then you started consolidating like this. And this is where you are consolidating. I'll draw a line of resistance here. Once done that, now if you're looking to trade the stock and looking to, let's say, buy here, where will your SL be? It will be the previous low from where the demand came, or simply the previous low point. Now, this percent difference from your entry point to the point where the previous low is will be your structural stop loss. All right, pretty simple and neat. Now, the other thing is expectational stop loss. All right, now this has more layers than compared to the structural one. If you see over here, the expectational stop loss can be based on the time. I'm sure you would have seen people that they will say that, if I'm buying a stock and the momentum in that doesn't come in, let's say 2-3 days, I will sell the stock and get out of the stock. All right, that's a time layer of expectational stop loss. Some people will say if the stock doesn't move tomorrow by a certain percent, let's say the stock doesn't move by 3% from my buy price tomorrow, then I will be out of the stock. While some people you probably would have seen simply use a number like, let's say, 2% SL, 2.5% SL, or 3% SL. Regardless of the structure, they simply use a number on all their trades, or they will say, I will use low of the day, also, LOD, as my stop loss. All these are expectational. How these numbers come in existence? Well, people simply see how they have been performing, and whenever their stop loss is hit, at what percent does it get hit, and whenever the trades that they have taken, how much the price fluctuates from their entry point before it starts giving the momentum. Based on that, people choose this number. Some people also go for low of the day. Now, you might be thinking, why low of the day is expectational stop loss when low of the day is something very technical? Shouldn't it be in the structural stop loss? I'll show it to you. See, let's say you are buying a stock at 9:46 a.m. All right, and at that point of time, the daily candle that you are trading on is looking like this. Okay, so this is the open, this is the close, and this is the high. That's how it is looking. It's entirely possible, and probably you would have seen it, that by 3 p.m., right around the closing, the same candle might be now looking like this also. So now the open is here, the close has happened over here. So what has happened? Well, it was an expectational stop loss because while you were taking the trade, you expected the daily to stay like this to protect the low that it has made while the daily candle is still moving. All right, and hence that is why stop losses like this, low of the day and all that, come into the category of expectational stop loss. All right, I hope you get the point here. Pretty simple. Let's see more details about it, and let's uncover it. But before that, there is something important, a topic of conversion of expectational to structural. What that is, let's try to understand it in great detail. Let's say you pick up a trade, all right, and you put on an expectational stop loss over there, which means if there was a stock and let's say it was looking like this, you bought the stock at this point, thinking that now we will cross this level of resistance that we have over here. All right. So you say that, okay, since my trade is the momentum will come and we will break through the resistance, I'm just going for a stop loss of 2%, let's say. All right, that's my stop loss for this. Now, let's say the stock stays at the same level for the next 1 or 2 days. You might be having a little bit of profit or a little bit of loss. Expectational stop loss simply says, well, you get out of the trade because you thought the momentum will come and it did not. Or the other plan is you can actually convert the expectational stop loss to a structural stop loss. How can it be done? Let's say with 2% SL, you had 50% of your capital in this given trade. And then you start seeing that the stock is actually starting to come down and there is a previous low structural SL over here. This entire distance that you see is, let's say, 4%, which means if I have to convert the current expectational stop loss to a structural stop loss, I will have to increase my 2% SL to a 4% SL. Now, then you will say, sir, what if the stock goes down and proceeds to hit my stop loss? If I continue with the given same position size, I will incur double the loss that I was planning. So, if you were planning originally to have 1% portfolio risk through 2% SL and 50% position size, now suddenly with this structural SL, you are exposing 2% of your portfolio risk. You feel that, sir, for me, this is a bit too much. I would like to stick with 1%. No worries. If you are here, what you will do is you will simply reduce this position size to 25%. You will simply half it. Why? Because the SL has been double here, right? So now what's the scenario? You have a 4% SL and a 25% position size. Or what somebody who loves risk, and who has conviction in this stock, in this trade, what he will say is, all right, what I will do, I'll keep the entire position size 50%. I will simply take the risk of 2% on portfolio with a 4% SL. Let's say what the stock does come down, it protects this one, goes up a little bit. Now what is happening? Now originally the 4% SL is also now offering you a different structural SL. You simply take that. So let's say now it has become 3%. Then again it does this. And now the SL, the structural SL has become similar to the expectational SL. Right? You can add more over here, whatever, however you wish to deal with that situation. And let's say the stock takes off. But there is something very crucial, which I will talk in a bit. Once I show you a few examples, I will talk something really, really important about this. But this is basically the conversion of expectational to structural. And why this happens? See, because expectational stop loss is something that you are forcing from your side. Market is not doing anything. It's simply giving you a structural SL. So it's always good that we stick to the structural SL. But at times it happens that we have to go for the expectational SL. And even from the perspective of expectational stop loss, if a stock doesn't do what you were expected, but structurally it is all right, you can convert it. And this is a great way to manage the trade. We'll see clearly more about this through examples. But before that, let's see something really crucial, because this will help me showing you the examples. And that is the stop loss and time frame dynamics. See, usually most of the people have this kind of relation with the trading style and the time frame that they operate on. People will say if you're scalping, it is 1 minute and 3 minute. If you're doing intraday, you usually do it on the 15 and the 5 minute. Somebody who's doing swing trading will usually use time frames similar to 1 hour daily, 45 minutes, whatever. People who are doing positional or long term will use weekly and monthly. That's how usually people do it. So, all right, we'll stick to it and we'll see how these dynamics affect the concept of stop loss, especially in scalping and intraday. All right, let me tell you over here, there is no Excel sheet risk management or a fixed stop loss in scalping. Why is that? Because option prices is volatile. Now, if you have traded options with a decent amount of capital, like I trade options, I usually do option buying in the index, Nifty, Bank Nifty. You will figure out if you have traded, you will see that, let's say you are watching something, some price action, and you decided on the kind of option that you want to go for. The option was priced at, let's say, 240. By the time you open the app, you open the terminal, you put in the quantities, and by the time you execute your order, it gets executed at 252, 248. It happens, right? Pretty normal with option prices because they are very, very volatile. Over here, just see the amount of slippage that you're having in simply buying something, and all of this slippage happens within seconds. It's not about minutes or anything as such. It happens within seconds. How will you deal with that? And similarly, when it comes to selling, let's say you bought it at 252. Your intended buy price was 240. You got it at 252. Let's say you are looking to sell, the option price has gone to 300. By the time you press sell and it gets executed, it will start reflecting as 292, 296, 288. Such kind of numbers will show up. So you're planning the price which you were planning to buy at, you got a higher price than that. The price which you were trying to sell at, you got a lower price than that. So over here, your 1:3s, 1:4s will not work. Scalping, I'll tell you, is all about what exactly are you trading for and how much are you willing to risk. So there is a upper limit on the risk, and that is it. Anything that comes within that is your stop loss. So let's say the price is falling down and you expect the Nifty will bounce. It bounces, right? So that is your entire trade. And this bounce may simply be over in 3 minutes. In 3 minutes, you have to enter, decide how much quantity will you buy, and then exit as well. Everything you have to do in just 3 minutes of time. In that, there is no time for to open the Excel sheets, do the risk management, be confused. Shall I risk 0.5% of the portfolio or 1% or 0.25? Doesn't work that way. In that time, the trade might be over. What I do is, let's say I'm buying option prices, I fix that, okay, I'll buy 10 lakh worth of options. That's it. Whatever the trade is, 10 lakh. And the maximum risk that I'm ready to take in options is, let's say, 2 lakhs. Anything that is within this loss is okay for me. And that is how usually scalping and intraday works. That if there is a loss, a trade, let's say, at times gives me 30,000, all right. At times, the trade gives me 80,000 loss, all right, great. There's no risk management or as such. You just have to decide how much are you willing to risk and what is the quantity you will go for. That's how scalping works. There's no fixed risk reward that I'll only sell if at least 1:3, because at times it has happened. In option trading, I have gotten 1:20s within a few minutes, and I have also gotten 1:1s. And both the trades were good, pretty good, and made money. That's how it works. Now, it's different. At times it has happened. I take a scalp trade, but then I see, all right, it can actually be held for a few more minutes. So the scalp trade is done. Now, if I'm holding it for a few more minutes, then that's entirely different trade. That goes into the category of then intraday. And with intraday trading, well, certainly it gives a bit more time than your scalping, because, let's say if you're trading intraday on a 5-minute, well, you at least have 5 minutes, right? A single candle will take 5 minutes to completely form. You have that time to decide everything. How is everything looking? What exactly do you want to do? So you do get time, but this also suffers from problem of slippage. And I'll show you this through a great example on the charts. But this is the concept of stop loss for scalping and largely also for intraday. At times it is possible that, when there are very liquid stocks available and a trade on 5 minute is available or even 1 minute is available in those stocks, All right, over there, the slippage will be less. But how many times it has happened with you? Not much, right? Most of the times, the opportunities for intraday in stocks that you get, I mean, if you're looking for good percent moves, it will be in stocks which are not that liquid on 1 minute or 5 minutes. Even if they might look like liquid, there will be a lot of problems in your bid ask, which you might not see it happening on the charts, but if you actually see the bid ask spread of those, you will see the exact problem that I'm talking about. This is something if you have traded and experienced, you probably would be able to relate to this. And even if you have not, that's all right. I'll show that to you through a chart. Now let's talk about stop loss for swing trading and positional and long term. Well, swing trading, as we discussed, usually happening on 1 hours and a daily. So over here, what is happening? You get an entire day to think and act, how much to buy, where to buy, and all that. And since you have time on your side, right, accumulation is possible, which means the price at which you want to buy the stock, that is a possibility over here. So the slippages are less, which implies risk management certainly gets a little better over here compared to scalping and intraday. But that is also only possible if you deploy the right buying methods. If you are a person who's buying right in the morning, 9:15s around that time, or high off the bar, or if you are a person who's simply buying in the momentum, these are not the right ways. Now you might be feeling, but sir, I feel all right. Well, look at the capital you are operating on. And I'm here trying to teach you everything because I wish that you go and trade with large capital. Over there, you will see what exactly I'm talking about here. You will not be able to get the liquidity. If you plan to buy, let's say, 80 lakh worth of stocks, you probably would have got fill of 40 lakhs, and that's almost 50% of intended position. That's horrible, right? So you cannot do that. Even 40 lakhs getting in high of the bar without significant slippage is actually a bit difficult. So the importance is that you start accumulating and not go for all these things. So right buying methods is crucial in swing trading because as I said, I discussed in the previous video of fast growth of a small account, right? Over there, you saw it that how the right buying methods can actually help you and lead to a great performance. So please keep this in mind. Otherwise, from a risk management perspective, swing trading is much more better than scalping and intraday. Then it comes to the positional and a long term. Well, over here, you are usually operating on the monthlies and the weeklies. Things get simple. You don't buy everything at once. You are building the position slowly. The risk management is pretty clean, regardless of whatever the capital size is, because through days you are able to accumulate and execute your entire idea. Pretty clean. Now, let's talk about the charts and then we will see some important topics again. Let's go to the charts and see examples of expectational stop losses and structural stop losses. Let's see this example over here, a trade of mine. So, this is where, I was watching it and I took positions here. And if you see, we are far away from 10 moving average, 20 moving average, and 50 moving average. But, anyways, I was expecting the momentum to come the next day. All right. So, what I was fearing is it's entirely possible we do not come near to any moving average and just take off from here. A candle like this can happen tomorrow. And I took the position over here. So, which means it's an expectational stop loss over here. All right. What happens? Okay. This kind of stop happens and this is not something you would like to see. I expected momentum. It's exactly the opposite that has happened. Well, during some point of day, it was actually looking like a candle like this you see over here, but then turned out to candle like this. Okay. So what to do? Now, as per expectations, the momentum, well, it did not come. So what to do? I reduced my position size to 50%. Why? Why 50%? Why not all the positions were liquidated? Why not an entire SL? Well, see, the 50% position that was closed was exactly at the price that it was bought. Why is that? Because momentum was expected, it did not come. Why are we keeping the rest of the 50% position? Well, I see the cycle. I see what is happening in the stock and what it is capable of doing. I was like, all right, I feel it might now come to its moving average of 10 and 20. But then that should be it. We will review this over there. If it comes to 10 and 20, we will see. And if it allows us to enter again, we will take the entry. All right. Let's see what happened. We did approach 10, but it doesn't look like any place to add. Then again, a pretty poor candle. Nothing great. And finally, we have this bad candle which takes us below 10 moving average. All right. Now it's time for us to see the stock closely. Closes again back above 10. And this is how it consolidates. Again, this doesn't look very convincing. Then we have a pretty good candle closing above 10 moving average. All right. And now we are sustaining above the 10 moving average. This is a place where we simply do what? Simply add back to the 50% of the position we had, and we will add much more. Because now the cycles are completed, we have a structural SL. Now, in this case, if somebody is buying here, what is the structural stop loss that is available if you are buying over here? This happens to be the structural SL. It's around 6.5%. That's a lot, right? That's a lot. So, sir, is it possible that when the structural SL is available, can we go for an expectational stop loss as well? Well, I'll talk about this a little later in this lecture. But let's say you put a position over here, you have an SL of 6.5%. What happens next? You simply have a great up move here, right? This is how this conversion of expectational to a structural works. What you could have done is you could have exited entirely and then wait for another trade opportunity. Even that is all right. But I prefer to manage my positions in such a way because this basically leads to lesser losses, more profits. As simple as that. But some people will say, so what if the stock from here simply keeps going down? All right, I'm ready to take that risk and I'm ready to take that loss as well. So there is an acceptance of loss here. That is one thing. And again, there are more things which you will learn which tell you the probability of what will happen and what will not happen. That's exactly what technical analysis is about. Okay. And then basically the stock simply went really great. So let's say somebody missed this and was looking to enter over here. Now, where is the structural SL? If you're buying over here, your structural SL is this 4.24%. So just take that and trade it. And I think the stock went up really well from this area. So had a great trade over here, right? Now, let me show you a few more examples. And this one comes from the intraday with the time frame of 1 minute that we will see over here. All right. Now see, I'll show you something important. We saw this structure happening. Now some people will do, I'll buy above the high of this or I'll buy above the high of this. Well, all of that is good if your capital size is average or small. Because I'll tell you what happened with me. I was monitoring the stock right from this point, in fact, from the previous day, but it had earnings, so did not buy the stock the previous day. But then this happened, it opened well, and this is how it was setting up on the 1 minute. Now, from this point onwards, 928, the price was at 636. All right. I started buying the minute this candle closed. Basically, the minute this candle started to form, this is where I started buying. Note the price is 636. My average price, by the time I was done completing all the position size that I wanted, the average size I got was around 643 and 644. That is the price, average price I got. Do you see the amount of slippage that was there? And this is very normal, especially for a bigger capital sizes. So, I mean, if you have a small position size, you can get away, but a percent slippage on a time frame like 1 minute is huge. You know why? I'll tell you. Some people will be like, okay, I buy above the high of this and I keep my stop loss over here. That is a 1% SL. And based on that, they will do their Excel calculations. Now just see, if I was buying over here and it took me slippage of 1% to get the entire quantity, let's say the price reversed and came back and hit the SL. I cannot come and show you, see, my SL was 1%. So I got out at 635 and I lost only certain amount of portfolio. No, it won't work that way. If my decided SL here was 1%, I probably would be losing and giving a stop loss of 2% or 1.8% at minimum. Because when prices fall, even over there, there's a lot of gap in bid ask spread. So if you are looking to execute at 635, your entire sell might actually happen by the time the price is at 629. That is where you might find the liquidity. And again, this is something that you can also experience with a small account. But for that, you have to put money on the line, not post videos and charts on Twitter. That's a difference. This is how it works. So on paper, it might look like, wow, 1 minute was offering me a 1% SL, and for that, reward was so much. It won't work that way. Try to do this and you can experience it yourself. All right. So this is from the perspective of scalping and even intraday, that these things are very normal and you have to have an acceptance over there. Once you have that acceptance, you can easily trade these and do really great. But this is something that I want to tell you about intraday and scalping, and most of the people will simply be busy showing you 1% SL and a higher reward. But what actually happens in practical terms, this is the picture. So over here, the stop loss that I had is, all right, if we go below this level and below this level, all right, I'll start exiting. Now that exit might happen at 630, 625. Okay, that's okay. That's the part. That's the acceptance. Because this is the time frame I'm dealing with, and these are the time frames of, these are the dynamics of this time frame. You have to understand it. Unless the stock is highly liquid, something like Reliance, Infosys, HCL Tech, this is simply not possible. So please understand this. Before trying to do all this, you have to understand these practical points. All right, we are watching the stock on a daily time frame. You see this happening. And what people will do, they'll be like, see, great expansion, contraction. You could have, placed your buy orders above the high of this 855 or 860. And, you could have gotten this trade clean 20%. You will see this happening on Twitter usually. All right, they'll show you what a great trade, what great volumes. But let me show you something hidden in this. Let's check the 1 hour time frame of this. All right. And you will see something interesting. You will be like, oh, wow, price, actually started from below 860, from 850, and then went up. Great trade. Let me show you something on 15 minutes now. Something similar you will see. And then, you'll be blown away by something that you see on the 5 minutes. So yeah, 15 minutes also looks pretty amazing, pretty good. Yeah, you could have bought it and made a lot of money. You could have entered with a 1% SL and all that. Now let me show you something. Now see this post that I did 20 March 2025, and this is what I wrote over here. And this is the same stock that we were watching on daily, and I have the daily here. But then see what is happening here. This is the 5-minute time frame of that stock. See how the price simply skipped up. The last good price that was available, I believe, was 855, and then directly to 885, 880s. And even if I'm telling you, even if you tried to buy through limit orders at the high of the bar or whatever with 50,000 rupees, this wouldn't have happened. Even if you had 1 lakh, this wouldn't have happened. Now just imagine putting money in the multiples of 50 lakhs or so. You can't do it. So yeah, what looks like something on daily, do make sure this is how it is. It might be looking like this on the 5 minutes. That's how it works. Now think about those methods of buying above the high of the bar, or whatever the cases may be. How will it work? So it's crucial for you to understand, that there are so many dynamics at play while you are trading across time frames, which you have to take care of. Now let's try to understand expectational stop loss and a structural stop loss from this example also. Let's say you bought this stock. You are saying, sir, it's an inside bar. Everything looks great. So I have an expectational stop loss of 2%. All right. Great. And what is the structural SL available here? Well, let's say you take the previous bars low. That is again 1%. And what is this? 2.5% only. So you're like, sir, I believe this is a much better structural point, right? Because, the price went up, came down, went up, came down. And from this point, it took a turn, right? So it becomes a pivot. So I'll use simply this one. 2.5% is my structural SL and my expectational is 2%. So there is not a lot of difference, which means it is now giving you scope of converting the expectational into a structural without actually risking much, right? So if the stock moves tomorrow, great. If it doesn't, you can simply convert and stay in the trade with the same position size. What happens next? Well, it does get a little volatile, but has anything bad happened to the structure? No, right? So absolutely no need to get out of the stock. In fact, just add more to it as long as the structure is intact. And then see, you got this great move. Now just imagine somebody who was accumulating during these days. He got this entire 20% with the position size at the price he wanted. Imagine about the people who buy in the morning or who buy at the high of the bar. The liquidity won't be there and the price they will be getting would be somewhere around 900. That's no way to be a great trader and to be able to sustain. You simply can't. Now I'll show you a little more complicated example of this, but that requires something that now I will talk about. So see, let's say you are here. All right, great. At this point, you pick a trade and you say, sir, I believe the stock will move up and I will go for expectational stop loss. And a structural stop loss is also available over here. I can see the price is coming down, and from this candle, it starts going up. So, kind of becomes a potential pivot over here. So, sir, what I'll do is I'll see how much is this. If I'm buying, I'm getting a stop loss of around 3%, and my expectational stop loss is around 2%, 2.5%. All right. So, you can go with either of those. But you see, sir, I see this also. So, I say that, hey, but it's possible that we might actually go to 20 or even 50 moving average. But that might actually be great. What do you do in that case? Again, sir, what I'll do is I'll keep the position, but I'll keep my risk same while converting my expectational to situational or to structural. And where do you think the demand came? Where the structural SL should be? I believe somewhere around this area, 848. The great thing is above this level, we have a 50 moving average. So that may help you a lot. All right. And the low of this candle is also somewhere around here. So this is a good area to have your structural SL. All right. Let's see what happened in the price. Well, your SL is it. So the expectational as well as this structural SL is it. Now there are two choices. You completely close the trade and wait for a new trade to come up here, or you keep that position as much as it allows to keep the risk same and then wait what happens. And then see this happens. This happens, right? Now what is happening? You could have entered a new trade entirely over here, right? Or you could have simply added more to this position. By the time this candle is happening, you probably are starting to gather profits. And then see what has happened over here. Now let's say somebody wishes to buy here. Expectational and structural. Structural SL is 8%. You might think that's a lot, sir. All right, go for this one then. It's a 3%, but again, this is a expectational stop loss only. And you get a great move. It's a great move, right? So, crucial to understand this. But now the problem is, sir, in these cases where the structural SL that is being offered is, let's say, 8%, and that for that means huge because then my position size is just non existent. Can I have expectational SL? What are the guidelines that I can have it? So, I believe we have seen great examples here, a good number of examples. Now, let's talk about this. When can you go with an expectational stop loss when the structural SL is a bit too big, which is making your position size very small? Let's talk about that first. So, see, I'll tell you one thing. Even this happens with me. There are times the trade that I'm taking is giving me structural SL of 6% or so, but I proceed to take expectational SL of 2%. How do I do this? What happens? Let's see. For this, do you know what is important? It is important that you mindfully put practice of the charts, specifically expression of supply and demand. There are a few expressions of supply and demand which repetitively happen on the charts. And if you mindfully practice them if you have seen them happen enough, you will know that, all right, structurally it is giving 6%, but you know that you have seen it happen a lot of times before. You have traded it and you can do it still, where you can go with expectational stop loss of a 2%. But this comes from mindful practice. It doesn't come from years of experience. I've seen people who say I have experience of 5 years in the markets or 10 years. Well, if you were not mindfully practicing, well, this is equivalent to zero. This doesn't help over here. While I have my students who are just 1 year old with me, for 1 year they have been learning with me, they are much better than somebody who has experience of 20 years. Why? Because my students were mindful while they were practicing, not just hogging through time and through charts. So, this is crucial. When you do this, you will see that there are certain expressions which keep happening again and again and again in very similar fashion. Over there, you can go and proceed with this expectational stop loss. And I will show you example of this. You saw this example. You see this entire thing over here. I'll show very similar pattern to you from Crystal. Happened way back. See this here. Very similar. Very similar, right? Now, if I'm looking to trade, let's say somebody is looking to buy here and he go for structural SL, it comes around 9%. That's a lot. I know I can get away in this one with even this as SL or this is SL. Basically 2% SL or even 1.5% SL. Which brings me to a point. What about these expectational stop loss of 2%? Well, it's nothing, just an in case thing. Otherwise, whenever I'm going with expectational stop loss, it simply implies I'm going with a position size that I like. If I want to buy 80 lakh, I'm going with 80 lakh. Now the stop loss might be 2.5%, 2% or 1.5%. It doesn't matter to me because anyways I'm going with expectational stop loss over here. That's the key over here. So I don't care about this 2%. It's just to, if somebody asks me, I just simply tell them this. Otherwise, I know what I'm doing. And that happens to mindful practice. Similarly, something happened again. As I said, it keeps happening again and again. See over here. Very similar, right? Similar. And now, if somebody says, where are the pivot point? Here is the pivot point. 15% SL. Absolutely not. Absolutely not. This is the place where this expectational stop loss and mindful practice comes handy. See this here. Where's the expectational SL? Here. 8%. Absolutely not. I'm not going to take that. That's how it works. If you truly practice it, you will benefit a lot. But for that, you need to do it in the right manner. And once you have done that, once you know a particular expression of supply and demand well, then you can proceed where structural SLs might be big, but then you can switch for the expectational stop loss as well. All right, let's move ahead. Now, let's talk about what exactly stop loss is, right? Nobody talks about it. I'll tell you. See, when you learn technical analysis, everything that you have learned over here, your job is simply to stack the probabilities in your favor. All right. And once you do that, once you perform technical analysis on a stock, you have stacked the probabilities. Now, what do? You simply make a plan that, okay, this is where I'll buy, this is how much I'll buy, this is where we will be looking to sell. And you execute it. Now, after doing all of this work, after doing technical analysis, seeing the probabilities, plan, executing it the right manner, for some reason, which might fall outside of technical analysis, the trade doesn't work out in the direction you were expecting it to, that's where the stop loss comes in handy. It is helpful to prevent any accident from happening. But there is a problem. It is also actually risk management misinterpreted. Because a lot of people have actually put risk management in the wrong context. This you have seen, right? These tables. We talked about this in the previous lecture as well. That they talk about 25% win rate and a risk reward of 5:1 will keep you profitable. And I'm pretty sure if you are doing this, most of you are frustrated with this. And the key word is frustrated. In the markets, it's not simply about making money, it's about being efficient in making money and being mentally well as well. 25% win rate with such absurd logics will not help you keep mental peace. And this is not the case. It has been normalized, but that's unfortunate. It's not the case. This calculation is valid. I'm not saying it's wrong, but this calculation is just to give you some reassurance, just to pacify you that all right, if you are committing too many mistakes, that's okay. Mistakes are absolutely fine. Not being perfect is absolutely fine. You just can work towards being perfect. You can never be perfect, as they say. You can work towards it, but that doesn't mean you will normalize a low win rate just because this calculation then starts justifying this. It's not the way. I'm pretty sure you would have seen it. I call it as stop loss abuse. People treat stop loss like out of 100 trades, 70, 75 are stop loss hits, and that has been normalized. And as I said, it's not the way to have a peaceful and sustainable journey. I'm talking about trading for years and years and years. It's not, I'll wait for a bull run, make money, and get out. No, no, no. I'm not doing that. At least I cannot do that. I don't have that liberty. I'm dependent on the markets. So the markets may be uptrending, downtrending, doesn't matter to me. I have to show up and trade. For me, I cannot go, and nobody can do and go about this. So to have a peaceful and sustainable journey, it's imperative that you always have a reason for why are you buying something, why are you selling something, why there was a SL hit, and even if the SL was hit, why the SL was placed exactly the way or at the position where you put it. There has to be a reason. You cannot simply give me that table of 25% win rate and a risk reward will take care of it. And again, with that, what profitability will you have? You are making 30% a year. Is that it? That's what you're doing after learning all this. Certainly not great by any standards, especially if the capital size is small or decent. Please understand this important thing. So there is absolutely no reason, to abuse the stop loss like this. Try to understand it as a concept and play accordingly. If there is a SL that is available of 4% structurally, we'll take that and try to mindfully practice so that you can come at a place where the structural SLs are huge. You will be able to take the expectational stop losses and be better in your trading. And if you're somebody who's doing scalping or you are doing intraday, I've shown you examples, I've shown you the charts, what happens over there, and that's absolutely fine. And if you are not fine with that, don't do it, because that's a part that will come with intraday or scalping. You cannot escape from it. So I'll tell you one thing, in the name of this low win rate and high risk reward in these, stop losses with absurd logics of, keeping stop loss small so that you can have a high position size, so that, your exposure of capital is less. This is bullshit. This is simply greed being sold. And then these are the people who talk about, oh, do not have FOMO or be mentally strong, while they're simply exploiting the greed factor in you. And then they talk about this so conflicting ideas over here. And that's exactly why you find yourself frustrated, circling around and around and around. So don't do all these things. If there is a SL which is 2% available structurally, why take it? That's great. That's an opportunity to actually have a small stop loss with a great position size. Take it, right? If it is available, take it. If it is not available, do not try to force unless you are really great with the skill. And your trading log will tell you whether you are great or not. I cannot tell whether you are great or not. Your trading journey and your mental state while you are trading, doing whatever you're doing, will tell you. If you're making money but the mental state is horrible, that's not something you would wish to do, right? Because then you cannot sustain. There will be other problems that will start popping up. So please understand, do not get fallen into this trap by these people. Go for the structural SL, and meanwhile, just keep practicing mindfully, and you will figure out that you have gotten great with time. And now you are just trading well. That's what I do. And that's what I teach people as well. All right. So this is important. Have shown you few great examples as well, and I'll try to show you more examples in the times to come. But all of this is really crucial to understand, especially this topic of time frame dynamics. You cannot expect to repeat the things that you're doing on a daily simply on 1 minute. All right. And this is the conversion of E to S. And yeah, I hope you understood the structural stop losses, expectational stop losses. Now you can see what exactly you are doing and where the changes need to be done. I mean, just study your trades. That if there was an expectational stop loss you went ahead with, instead of that, if you went ahead with a structural stop loss, how the outcome of the trade would have been different. Study yourself and you will have the answer. All right. So, expectational stop loss is something for which we really need mindful practice. Otherwise, you will keep taking stop loss and after stop loss with absolutely no reason at all. And that puts you in a frustrating place. Nobody wants to be in. You cannot be frustrated and trade markets because it is a place where mentally you need to be very stable, very calm, very collected. All right. So I hope this video helps you in that, pushes you to think in the right direction, and you will certainly make positive changes in your trading style if you follow everything that I've said.